Hello, I'm Warren Robbins of Medident FS. I'm an income protection specialist for dentists and medical doctors. Today's topic is who offers the best income protection for dentists? Now the answer to that question is, not surprisingly, it depends on your specific circumstances, but there are some general guidelines that can save you a lot of money when you're choosing income protection. So if you already have a policy, or if quite sensibly you're looking to take it out, keep watching, as spending a couple of minutes here could seriously reduce your future spending on income protection. As a dentist, there are a lot of people competing for your business, and this is certainly the case with income protection. The most popular insurers in dentistry are Dentists Provident and Wesleyan, both of which heavily trumpet the benefits you get from their expertise in the dental and medical fields. Now, while I would totally agree that a detailed knowledge of the dental field is a valuable asset when advising on dentist income protection, that knowledge is also available through independent brokers specialising in dentists, like Medident FS, with the added advantage that they don't offer policies from just one insurance company. If you want to get an unbiased analysis of how Dentists Provident or Wesleyan policies compare to other insurers, you obviously won't get that from their advisors. You can expect both to tell you that their policy is the best for dentists, but realistically, what else are they going to say? Now, a dental specialist independent advisor, however, is not tied to one insurance company, so can offer unbiased advice on all the options that are available, and they can almost certainly offer significant savings in both the monthly premium and the full policy term cost. If you really want the best policy, it makes sense to speak to Wesleyan and or Dentists Provident, but then make sure that you also speak to a specialist independent broker as well. That way, you'll be making a fully informed decision on who to take your dentist income protection with. And considering how long these policies run for, it's a decision you really don't want to get wrong, because if you do, it could easily cost you an extra £40,000, even for a modest income protection policy. I know that sounds crazy, but that's the reality. As long as you're comparing income protection policies offering own occupation cover, which pays out if you can't work as a dentist, the core benefit is essentially the same with any insurer, dental specialist or not, as they're all regulated by the Financial Conduct Authority. Now this means that unless you have specific factors such as working through your unlimited company, you can look for the best value policy available, but you'll be surprised to hear this doesn't always mean the lowest starting premium, and I'll explain why. The reason is when insurers apply the annual cover increases, the premium goes up by more than the cover, with the exception of one insurer. And there are more than 10 different increase methods used by insurers, and here are some examples. Now the result is that for any given cover increase, there will be quite a range of different premium increases. Finding out which method is used by an insurer is really difficult unless you talk to me, because this information is buried deep in the policy documents, which you're only given after you've taken a policy out. Now the best way to illustrate this is to show you what happens to the premiums of different insurers with the same amount of annual cover increase, if they all started at the same initial premium. Now, obviously they don't start at the same cost in reality, but this does show the impact of the different increase methods on the long-term cost. As you can see here, the age-costed increase method used by both Wesleyan and Dentists Provident becomes increasingly expensive as you get older, leading to a much bigger full-term cost compared to most other insurers' increase methods, apart from vitality. But that's only half the story. If you apply the different increase methods to real premiums, it makes interesting reading for dentists. This projection shows total costs as follows. Holloway at just under £29,000, Dentists Provident just under £69,000, and Wesleyan at over £85,000, so massive differences. In theory, you can see the cost impact I've shown here on insurer quotation documents, as they have to include the full term cost. But here's the thing. Insurers write in disclaimers so the total cost they show assume the starting premium does this. It never changes, so completely unrealistic. A realistic cost, if the annual cost of the increase at the same level as the last 35 years, just 3.6%, can be between £2,000 and 6 times what's shown on the quote, depending on the insurer. These disclaimers are subtle, as you can see where I've highlighted the one used by Dentists Provident, but what they hide is pretty shocking. The premium differences shown in my example are not unusual. Wesleyan and Dentists Provident starting premiums are normally quite a bit more expensive than some other insurance companies, which only exaggerates the age-costed increase method. Using data from dentists I've spoken to over the last 3 or 4 years, Dentists Provident averages around 40% more expensive and Wesleyan averages around 55% more expensive versus the best available starting premium. When you can work out realistic overall costs, what you see is that certain insurers are normally very expensive, such as Wesleyan and Dentists Provident, Vitality, Cirencester Friendly and British Friendly Society. So, unless you're happy to overpay, you can normally rule them out. But there are plenty of other insurers to choose from, all offering equivalent cover to that offered by dental specialist insurers. Okay, if you speak to an independent insurance advisor, which insurance company are they going to recommend? Well, that depends entirely on your individual circumstances. Are you a sole trader or do you work through a limited company, for instance? So, in reality, there is no single insurer that's the best choice for every dentist. Also, how the insurance is set up is equally important, and insurers vary in their competitiveness for different cover arrangements, and this also changes over time, so there are many variables. The key point is to get expert independent advice from an advisor that can forecast and compare realistic full-term costs, and that's what we pride ourselves on at Medident FS. Oh, and by the way, a word of warning. There are 2 types of independent insurance broker available regarding the premiums that they charge. The first type charges exactly the same premium as you would pay going direct to the insurance company, such as Medident FS. The second type receives a boosted commission amount, which is paid for by increasing the monthly premiums, typically by 10 to 20%, which will cost you an enormous amount extra over the full policy term. Just ask a broker if their premiums are loaded, and if they are, I suggest you look elsewhere. Okay, thanks for watching. I'm Warren Robbins, the income protection specialist for dentists and doctors.